Welcome to the WealthKeel YouTube channel. And today we have a very special episode, our first ever guest episode. Not only is that amazing, but we also have probably, I know personally, my favorite insurance guru, but I would argue the number one insurance name out there, especially in the physician community, the one, the only Larry Keller. Larry, thank you for being our first ever guest. How are you, my friend? How's life? Looking dapper as always.
Life is great. Now, usually you're the guy with the bright colors, in Florida. Today, you're very reserved, and I am the somewhat bright color guy. Uh, it's funny because Guru is usually reserved for those that don't know what they're doing, but I will definitely take Guru as a compliment, and we'll hit as many topics as we can, high level, and if need be, we know we can always drill down and go pretty deep.
Yeah. I reserve the term guru for the best of the best. So that's the way I was using it. And just a little personal story for everyone. You know, WealthKeel, myself in particular, used to sell insurance. We would sell disability insurance. We would sell term life insurance. And many years ago now, I mean, we're almost. I think we're like almost on like 8 years of not using and selling insurance products. I would have random one-off questions, and anytime I had these questions, I would go to one person. That was Larry. And the best part about Larry was Larry never asked questions. Larry didn't say like, "Hey, are you gonna? Is this a referral to me or what?" He would just give me the best answers of all time, and that I could actually go put into practice. So after a few of those, I started thinking to myself, Larry has so much knowledge, but as we'll talk through today, there's also special programs, there's special discounts inside of the disability world where it really is based on who you know, how much production you're doing. And after a few of those exchanges, I literally at this point I think it was me and maybe Zach. No, Zach probably wasn't even there yet either. And I just thought to myself, this is silly because I actually am doing my clients a disservice by not opening this up. And that's when we started using you, Larry. And honestly, from very early on, we never looked back. And to this day, at least for our WealthKeel practice, you are our main go-to. And even when we ask you questions, to this day, 8 years later, you never ask questions. We ask for numbers, and you just give us the data. Adam on your team as well, always there for us. So just a quick little intro to the audience, but again, a huge thank you that since day one, you never asked questions about like, why are you asking me? Are we going to get a client out of this? You didn't care. You just wanted to answer the question, help somebody, and get them to the right spot. So
Yeah.
I think that's a good intro for you, but it explains a lot about how you do business, not only then but today.
Yeah, I mean it's all about the education. And at the end of the day, doctors are really our heroes that don't wear capes, right? They're highly trained, they're highly educated. They lack time. So whether it's financial planning and they're going to you and they're like, Chad, I'm not going to just completely turn over the reins and like let you do whatever you want. Like I'd like to be involved in the process, but I got to make sure that like the I's are getting, dotted and the T's are getting crossed. And it is my individual needs and goals and philosophy that's going to drive the financial plan. So I really look at you guys as kind of like, how do I get the map to the treasure? And if I tell you what I'm looking for, you'll use your education, training, experience the same way physicians will use their education, training, experience to best treat a patient. Like you can't guarantee that you're going to get them the results that they want, but it's kind of like going to a board certified plastic surgeon as opposed to a quote unquote like cosmetic surgeon. Like if the education, training, and experience is there, the odds are better that you're going to get them the ideal result. And the problem with financial planning happens to be that there's a lot of people out there that don't have any certifications. They don't even have the licenses, and they still call themselves a financial advisor. So much like medicine, experience is key, and certifications might not be the end all, be all, but it certainly shows that at least you've got a minimum level of competency. And I don't know if you've seen this, but the studies that came out recently. So there was a LIMRA study talking about financial planners, whether it's insurance agent or actually financial planners, and they looked at 4 years of a retention study, and it's gotten a little better. It used to be an 87% dropout rate.
Hmm.
Now it's 85%, right? So if you look at it and say, Okay, medical school, let's say is 4 years, the average class size, let's just say is 100. I'd submit to you that, like, probably 95% or 95 out of 100 are going to finish medical school and they're going to get their MD, DO, MBBS. They're going to practice in some capacity. They'll go on, they'll be board eligible and then get their board certification. That's a really high number. We'd probably find a couple that said, Chad, you know what? I don't know what I was thinking. Like, I'm living my parents' dream. I should have been a dentist. I got to get out of here. I should have been an MBA. Should have been a lawyer. Two of them just realized that the sciences aren't for them and they want to get out. But can you imagine in a class of 100, 15 are left in terms of insurance or financial planning 4 years later? So if I'm talking to a financial advisor and I'm a resident or a fellow and I'm attending a seminar at the hospital, I got to say, probably one of the first questions I would ask is, how long have you been in the industry? And if it's less than 4 years, I'd be a little bit cautious in terms of, are they going to be around when I'm done with my training? Because the odds are against them and they very well might not be. So there you have it.
Good opportunity to thank all my clients that joined me in the first 4 years for trusting me. So I always joke, Larry, my thing was I wanted to start my own practice for two reasons. I didn't want to have to wear a suit every day, and I never wanted to have to do a Project 100. Now,
Yes.
technically, my first mentor was like, "Hey, you should kind of build something like a Project 100, but you don't have to like cold call them every day." There is a very high failure rate in this industry still, and I think it's getting better though. Truthfully, I come back to it a lot where I think a lot, and this is clearly not going to be the topic for the day, but a lot of individuals that like the idea of financial planning, unfortunately, end up at firms that are not financial planning firms. they're
Yes.
they're selling, right? And that's not what they signed up for. They want to do budgeting, they want to do cash flow, they want to learn how true own-occ disability fits in with their overall cash plan and why they can maybe retire here, and then they want to buy their first home and they're going to have two kids are going to go to Penn or Penn State. Like,
Yep.
they signed up for that, but then they get there, they're like, hey, I need you to call mom, dad, aunt, uncle, all your college roommates, like, and we're going to start selling stuff. And whether that's mutual funds, insurance, or whatever. So I think that's why you see such a high, pretty good group coming in, but then just not hanging in there long term. But
Yes.
regardless, I agree with that sentiment there. All right, someone doesn't know what disability insurance is. How the heck do you describe disability insurance? What is it? Why do I need it? What the heck does it mean?
Yeah. So I'd say you may or may not need it. We don't know that until we interact with the client, right? Different strokes for different folks. But if you're a young physician, or even if you're, mid-career and late career, and you've got a family, you've got people that depend upon your income, disability insurance is really paycheck insurance. It basically says, well, Chad, what if due to an accident or sickness, I'm too hurt to go to work? And the hospital or the practice or the multi-specialty clinic might say, well, Chad, we have some type of coverage here that we provide, but beyond that, if you're too sick or hurt to work, you really have to figure it out. So short-term disability, as a financial advisor, you're probably telling people, we really got to make sure that in the best case scenario, you've got 3 to 6 months of your expenses put aside so you're okay. And short-term disability is just that. I recover, I go back to work. Sure, it's inconvenient. It might be financially bad, but not necessarily devastating. Where it's devastating is if I don't have the resources where I don't need to work anymore. I have my employer provided coverage, if any at all, and that coverage has limitations associated with it to prevent you from receiving benefits under certain circumstances, or maybe there's offsets for certain types of benefits that you might receive elsewhere. So, good example, group insurance plans that are provided by employer. Generally, they're not going to be portable. So if you leave that job, that stays behind. General rule of thumb is if your employer is giving you the insurance at no cost, you might say it's free. It's not. The benefit as a result of that is going to be taxable to you. So, very common, and you probably see this with your clients, is that Your employer and the insurance company that they're using is going to replace a percentage of your income. And it's typically going to be 50%, right? 50. Maybe it's going to be 60%, 60. Maybe it's going to be 66 and 2/3% of your income. But there's a maximum monthly benefit associated with that in most cases. It might say, well, Chad, we're going to give you 60% of your salary, but the maximum monthly benefit is $10,000. So right away, you look at this as a financial planner and you're like, okay, you're giving me 60% of my salary. That's not 100%. Then if you're giving it to me at no cost and you as an employer are taking an income tax deduction for the benefits you're giving to me as an employee, I have to pay tax on that benefit. So my 60% is going to be less than 60%. And insurance companies generally assume that you're in a 30% tax bracket. And then you've got these caps. So let's say that the monthly benefit maximum is $10,000. You're earning more than $200,000. Well, anything above that, in my example, you have no coverage for whatsoever. So if I'm earning 400,000, which is double the 200,000, and even that 200,000 that is covered has a tax associated with the benefit, I'm really pretty far behind relative to what my income is and the percentage that's actually being replaced, right? So at that point, you would probably advise your client, if they haven't done something already, this is what you're taking in on a monthly basis. This is what's being replaced by insurance. There is a deficit here. And we know your financial situation because as financial advisors, you've given us your tax returns for the last 2 years. We've looked at your pay stub. We've looked at your retirement plan statements. We've looked at your brokerage accounts. There's just not enough here relative to your financial obligations. We recommend that you purchase long-term disability insurance, and it should have these features associated with it. If it happens to be you married extremely well, you've got family money. If you work another day in your life or not, your life is not going to change. For lack of a better term, you've reached financial independence. Then you probably don't need disability insurance at all. But it is one of the most effective ways to replace your income if you are too sick or too hurt to work. Sound reasonable?
Beautiful. Yeah. The financial independence is a conversation we even have with our more maturing attending physicians where they're headed towards, as you know, financial independence. And we'll always describe disability insurance as that. Like, hey, in a perfect world, we do this the right way. Like, you don't need disability forever.
Mm-hmm.
But early on, boy, oh boy, I mean, there's probably not an insurance that's more important or at least tied, in that top tier than disability insurance, especially again, younger physicians. I think the other unique thing with physicians too is right, they're on track for such a high income, but then they have such a long training where it could be no income medical school or I always do air quotes for low income
Yep.
during their training years, where it's a fair number in terms of salaries out there, but for the work that they're putting in, they're underpaid. But it's still good
Yes.
money, but it's still all towards this larger goal of a multiple of that, or many multiples of that. So disability insurance is just it's the one thing in the financial plan that luckily we don't get much kickback on it. Like we don't have anyone ever saying like I'm not doing that. Do we have to maybe move things around a little bit every now and then? Do we maybe have to explain why like the group plan isn't as thorough? We do. But luckily, I feel like there's been
Yes.
good conversation. This also seems like the one topic inside of a hospital that I always say, like, I'm okay with this conversation in the hospital cafeteria. Like, I feel like when the older physicians
Yes.
are like, hey, like, you need this, like, this one, non negotiable, like, you need it. If we get into like stock picking, then I say, like, hey, maybe we don't talk to them anymore. But
Yeah.
talking
That
about
that
disability insurance, I'm all in. I like that chat.
Yeah, and most of the seasoned physicians, they're very well aware of it. I mean, the biggest purchasers of individual disability insurance happen to be physicians, dentists, and dental specialists.
Yeah.
So from the moment they become a physician, even in medical school, they're keenly aware that this should be something on their to-do list.
Yeah.
And I would say if you make it through training and you did nothing more than three things, you did really well. You buy your own occupation, which we'll talk about, disability insurance. If you're married, and your spouse is dependent upon your income, you buy some term life insurance if you love your spouse. Oddly enough, even if you hate your spouse, but you have kids and you love your kids, you might buy some term life insurance for them. If you plan on opening your own practice, which is becoming more and more rare these days, but let's say plastic surgeons, of which I have a lot, when you go out and you're going to go look to get a loan, whether it's an SBA loan or you're going to a bank for a loan to start up your practice, very often that bank is going to say, well, doc, we believe in you. We believe in your potential. We're willing to give you the money, but if something happens to you, we got to get paid back. So we want you to have life insurance, and we want to be the ones that are entitled to a certain amount of the proceeds to make sure that we get our money back. So there is something, and you're familiar with this, that's called a collateral assignment, which basically says I'm going to buy a life insurance policy for whatever amount. The bank is requiring that they get back at least X amount. So you don't want to make the bank the beneficiary, because if you've been paying them down for a bunch of years and what used to be $1 million loan is now 250,000, like they're going to get a windfall if they're your beneficiary. So you buy a policy, you make your real beneficiary the beneficiary or beneficiaries of the policy, and then you assign the death benefit or a percentage of the death benefit or a dollar amount, or you can even use the term as interest may appear. So whatever the bank is owed, they get paid back first, and the balance goes to your beneficiary. And then once it's officially paid off and you owe the bank nothing, you have them sign something to release the collateral assignment. And now that death benefit 100% goes back to your beneficiaries. But general rule is if you call me on a Wednesday and you tell me that you're planning on closing on Friday, it's not impossible, but it is highly, highly unlikely that you're going to get that life insurance policy approved in that period of time. It can happen. But if you're seeing a physician, if you've had some lab testing done, if something's going on, the odds are very good it's not going to happen. They're going to want your medical records. And do yourself a favor and make sure you have this policy set up so it's ready to go before you start looking to close on your loan. The last one is get your employment contract reviewed. So residents, fellows, they're finishing, they're used to getting paid nothing close to what their skill set, really deserves. And you want to make sure that the attorney that's reviewing your contract is not looking at you and you're the first physician's contract that they're reviewing. And there's some keen differences between academic contracts, multi-specialty clinics, private practices. And you're talking about like a multi-million-dollar contract over a period of time, right? It's like almost like being a professional athlete or a movie star. Like these people would never just sign something blindly. And one of the funniest ones I've had, and you might get this too, because it's a similar clientele. Oh, Larry, I went back and I told my future potential employer that I want to have the employment contract reviewed by an attorney. And they're like, well, look, everyone signs the same thing. You can just go ahead and sign it. Like no one before you has asked about this. And I say to the client, like the answer should be, don't judge me based on the stupidity of those before me. Your contract for me to sign was drafted by an attorney. I need to have my counsel review this to make sure that I understand what I'm signing, because I am not a wordsmith. And something like may that means nothing to me could mean everything to my attorney. So you want to make sure that you have that reviewed by a competent healthcare attorney, not a real estate lawyer, not a generalist, not even a contract lawyer that doesn't do physicians. If they don't know what a resident is or what a fellow is or what an RVU is, yeah, you're probably talking to the wrong person. The only other thing that you can do, if you have any money left over along the way, it's a good opportunity to take advantage of a Roth IRA or a traditional IRA. But there's even ramifications with that, with student loans, and are you going for public service loan forgiveness? That could be a driving factor as to, do you use a Roth IRA or do you do a pre-tax traditional IRA? But That's the stuff that I bow out on, and I leave it to, you and your firm, because I view you guys as the planning people, and I view myself as ultimately the product person. And if you've got the planner doing the planning and the product person doing the product stuff, that's kind of like the dream team.
One of our very first conversations, you even said, defense wins championships, relating the protection side of the financial plan to the defense, right? And you
Yes.
got to have a good defense to win a championship. And I mean, I think it's one of the reasons why we also started trusting you so early, was because we also knew how vital that piece of the pie was for this group that we were going to work with day in and day out now, and knowing. I mean, we joke about this all the time on new plans. Like, you could have the world's best financial plan. You could be on
Yeah.
track to have a private jet, private yacht, all of it. But if you didn't have the right protection in place, whether this is through a life insurance or a disability insurance, all of that is gone. Heaven forbid one of those events ever plays out for you, especially very early in the game. I mean, it just does, your financial plan could become nothing. It doesn't mean anything at that point,
Yeah,
which is
that's
why those parts are so important.
yeah, it's like having a non-electric car and you've got no gas to put into the tank. Like, it's just not going to move,
Yeah.
right? And I'll tell you, I've seen enough. When people are buying insurance, a lot of times they're getting, pitched based on price. And it's someone that they found maybe on the internet. They request quotes. They got what I really despise seeing, a spreadsheet with minimum information that's designed to have them make a purchase, a really expensive long term purchase that is one of the most important insurance policies, if not the most important, that they're actually going to buy. And I've seen a bunch of these spreadsheets and I know what I've been doing. I've been doing this a long time. They never got actual illustrations of coverage run on the insurance company's software. So they're getting something that's created by an agent, where the agent is professing to know what should be important to a client before they've ever spoken to them. And I'm good at what I do, but if I don't know anything about you and I don't know what your individual needs and goals and philosophy is, how can I possibly help you buy the policy that's designed for you? Because insurance is an individual purchase, it's not one size fits all. So I get these spreadsheets. They typically can contain minimal information at best. It's designed to get someone to buy something based on price. Like, and I look at these, and the first thing I do is I say, can I find an error? And every single time, without fail, I find errors because it's designed to be something that can be generated quickly to get something to the prospect or the potential insurance buyer fast. And if you're doing it right, you cannot shortcut the system. I can tell you between policy A and policy B where they differ and why this provision might be more important to you than another one. But if I'm sending you what I think is important and I'm not giving you options, even within the same company, how can you possibly make a decision? So I get these things, and I kid you not, the first time I see them, I go to my software and I start running the actual illustrations of coverage to try to figure out what this person illustrated, what discounts they included, if any, to try to replicate the price that they created. And if I need to go to the software to do this, how is a client that has no idea what they're doing, where this is the first time they're interacting and seeing disability insurance and definitions, how are they going to be able to discern the differences between policy A and policy B? It's very difficult. I mean, in a lot of cases, you might not be able to even look at it. Like, I'll give you an example. It might say catastrophic disability insurance benefit, and it'll list, let's say, 5 companies. And it's not going to give you any details. It's just going to say, yes, included. There are different catastrophic disability benefits from one company to another. So if I'm showing you a lesser definition versus a more expensive definition, and all you see in that spreadsheet is yes, included, what do you make of that?
Oh.
It's crazy. So you'll see disability insurance is not complicated. It takes a little bit of work. I would say after watching this or listening to this, get some illustrations of coverage if you have an interest, review them, and maybe an hour later, you'll be able to feel really good about your decision. Now, in theory, as much as I'm an advisor, I'm a sales guy, right, Chad? So someone comes to me, Larry, I heard about you. Just give me whatever my friend Dr. X did. And you would think, I'm a sales guy. Like, this is the greatest thing in the world. Like, there's no work for me. I just give him what he wants and I move on. That is my nightmare because I know what's going to happen. At some point, this individual is going to run into another insurance agent, and that insurance agent is going to say, well, doctor, I see you have a policy with X. Do you mind if I ask why you purchased that? If they sound like Jackie Gleason in The Honeymooners, like hummina, 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 and they don't have an answer, they're going to come back to me. Larry, I'm sure you did the right thing for me. I don't really want to inconvenience you, but can you tell me why you gave me this policy over anything else? Well, sure I can. You told me you wanted what your friend Dr. X bought. Well, you didn't know anything about me. I'm like, no, I didn't. But you told me that that's what you wanted. So now I'm going to have to redo what I would have done in the beginning to hopefully confirm that what Dr. X did is what you would have done had you known what you should have known before you reached out. I would much rather have someone put the work in up front, and then they can say to that insurance agent, oh, I know exactly why I bought this. This was important to me. This was important to me. And from a cost versus benefit standpoint, that's exactly why I went with that. That agent is not going to be able to do anything other than say, I'm really glad that you understand what you did. It sounds like you did your homework. Best of luck to you. Or at least that's what should happen.
And I don't think it's such a simple point, but it's one that I don't think most people realize that, right? That outside of exclusive discounts, GSIs, like just like Chad versus Larry, like let's just say I'm
Mhm.
still selling insurance and you didn't have any discounts, I didn't have any special discounts. If I go to Guardian's website, Standard's website, Principal's website, and I run apples to apples, the same thing that you ran, we will get the same number. The only
Exactly
way
the
I
same
can get
number.
sexier than you is if I start tweaking some things to say like, look, they're close enough, but look, this premium's 10% lower. So as soon as you go shopping for price, you and I have had this conversation before in the past too. Like the only reason why it's lower is likely because something changed that's not going to give you better protection, right? The price didn't go down because you have better protection. And I don't think
No.
most realize that, and especially when it comes to the spreadsheet game, right? If you go to firm A, B, and C and you get spreadsheets, and probably the spreadsheets all have the same 5 providers on them,
Yes.
we ideally they do because we're all independent. You're looking at the same thing. So the only thing that you can tweak is if you go into your software and you're instead of 180-day elimination, you're plugging in a 90 or like I don't think most realize that. And that's where, heck, again, giving you a shout out for one of the things that early on, like when we clients that were on Visa, and you're like, Chad, there's only one company you work with
Yeah.
clients on Visa. I'm like, shoot, like I didn't realize how like the nerdiness. When you get a spreadsheet, you're like, oh, it's just this price thing. But when you truly
Yeah.
dig into the weeds and you do the right thing as you do, and digging into it a little bit more, there are so many very important details inside of it that are vital. The Visa one is a great example of like, heaven forbid your visa is revoked and you have to go back home and you're on disability. Hopefully that policy still covers you. And that's just a
Yeah.
level of nerdiness that I just absolutely love. But it goes to show you how fine tuned you have to be when you're reading these policies because and if you do it the right way, you probably get one policy that you build around probably for the rest of your career. Maybe you sprinkle in a little bit more at some point, depending on your income. But you got to do the research once, and you likely have your core hub for the foreseeable future.
Yeah. I mean, ironically, now I'm going to school my competition. I'm yet to see a spreadsheet that ever says, does this policy allow me to reside outside the United States or Canada or maybe Mexico and continue to receive benefits with no limitations? I'm yet to see it. And I've gone on podcasts and talked about this. To me, if I was a visa holder, the first question I would ask is if I become too sick or hurt to work, I lose my sponsorship, I need to return to my country of citizenship, is this policy going to continue to pay me? I mean, that should be the number one question. If I'm a visa holder, it never gets asked. And if you don't know that you need to ask that, and you rely on something like a spreadsheet, the odds are very good you're not going to get the ideal result. And what you said is spot on. With the exception of about 8 states, you're fine with one company that essentially says, we know you're a visa holder. If your disability begins in the United States and now you need to return to your country of citizenship, as long as it started in the United States, we'll pay you with no restrictions. And if it didn't start in the United States, and let's say you were at home, you left, you had tickets booked, you were coming back within 31 days of leaving, this company calls this incidental travel.
Yeah.
You become disabled. Something happens. You cannot make it back. You now need to stay in your country of citizenship. You still get paid with no restrictions. So if I'm from another country, that really is going to be of utmost importance to me. I mean, it really should be one of the first things, if not the first thing, that you inquire about.
You and I both have said it a few times now. Probably outside of the term disability insurance, probably the second most important term is own-occ, true own-occ coverage.
Yes.
What the heck does that mean?
Yeah. So think about it as own occupation. Now, Chad, some people will disagree with me. Some people will use the term own specialty. Technically, that is incorrect. And the reason it's incorrect is we don't go based on your board certification. We don't go based on what you call yourself. Your duties, what you do day in and day out, is actually going to be the definition of your disability insurance policy. So let's say that you are an internal medicine physician. Maybe you're going to go back and do a fellowship. Maybe you're not. And you finish up and you're like, you know what? I'm not ready to be a PCP. No one's looking for me. I'm single or I'm married with no kids. I'd like to make more money out of the gate. When I'm not in the hospital, I don't even want to be thinking about anything. So, you know what, Chad? I'm going to be a hospitalist. I'm going to do my shift work. When I'm there, I'm going to teach residents. I'm going to admit patients. I'm going to do rounding. I might do some bedside procedures, but it's all good. And my certification or board eligibility is internal medicine. And I'm feeling great. I'm making money. I'm working as a hospitalist. Now something happens to me. I can no longer do my shift work. My accident or sickness does not allow me to do, let's say, 12-hour shifts. Well, my main duties were that of a hospitalist. If my disability allows me to do outpatient internal medicine from 9 to 5 with an hour for lunch, even though I'm still practicing under my board certification of internal medicine physician, but now I'm doing outpatient and not inpatient, I'm totally disabled. I'm going to get my full disability insurance benefit, even though I can still work as an internal medicine physician. And guess what? That's my medical specialty. So when someone says specialty specific, technically that is incorrect. So you want to look for own occupation. And the way that this would read, here's the nerdy guy in me, is you'll be deemed totally disabled if you're unable to perform the material and substantial duties of your occupation. So what are my material and substantial duties? Well, these are the things I do day in and day out that cannot be reasonably omitted and allow me to practice doing that. I'm done. Full benefits are payable. Ideally, if I can use my education, training, experience, maybe I can retrain in another medical specialty. Maybe I can go work for a pharmaceutical company. Maybe I can do medical legal work. Maybe I can become a professional blogger on how to be a better clinician. That's a completely different occupation and full benefits are payable. Now, I listen to Physician Sense enough and I'm on the internet enough to know it's unfortunate, but doctors these days are told that being a physician is not enough. I need to have a side gig. And it can't just be answering medical surveys and making a couple $100 a month. I need to have multiple sources of income. How often do you hear this?
Yeah.
Tremendous amount,
Yeah.
right?
Side gigs everywhere.
Everywhere. So let's say my side gig is not so much of a side gig. So I'm a hospitalist and I'm doing my shift work, which is great. But because I have a lot of time, and when I'm not there, I'm not there, I decide that I am going to do consulting for a pharmaceutical company to a very large extent. And at the same time, I'm going to do medical legal work. And now, God forbid, something happens to me. Follow my example. I can no longer work as a hospitalist. I can't do my shift work. So the client calls me, Larry, this terrible thing has happened to me. I can no longer work as a hospitalist. I need to file a disability insurance claim. Like, how does that work and what should I do? And I'll explain to him, this is what it's going to look like. This is what you need to have ready. But let me ask you, what were you doing? Well, Larry, you know, I'm a very entrepreneurial guy. I read blogs, I listen to podcasts. I had a lot of different income sources because I wanted to prolong my clinical career. So, yeah, I was working as a hospitalist. That made up about 60% of my income. I was doing consulting. That made up about 30% of my income. And then I was doing medical legal work, and that made up about 10%. So I need to file a claim because I can't work as a hospitalist. I'm like, oh, now you've really screwed up the apple cart. Like, we don't view you as just being a hospitalist. Like, you have three jobs, Chad. Like, you're a hospitalist, that's true. But then you're a consultant, and then you do medical legal work. So, general rule of thumb is if we view you as having three jobs and you can't do one, which is that of a hospitalist, and you could still do the two others, physicians are type A personalities. They're going to do more of the two others because they can't do the one where they were working as a hospitalist. If the insurance company calls you partially disabled and pays you based on loss of income, which would be the case in this situation in most circumstances, the problem is if I'm partially disabled and I'm getting paid based on loss of income and I do more of the two other jobs and my income from that goes up, and my loss of income from the inability to work as a hospitalist goes down, if I get to the point that I don't have the required minimum loss of income to get partial benefits, guess what happens? I stop getting paid.
Hmm.
So what Guardian did is they came up with a unique definition for them about 6 years ago. And they call this the enhanced medical specialty definition. And they would basically say, Chad, before we tell you that you had three jobs and you can't do one and you could still do the other, and if you get to the point you don't have that 15 or 20% loss of income anymore, like, we're sorry, but like, you don't even meet the definition of partial disability anymore. We're done. They say, Chad, let's take a step back. Before we tell you about this, prior to your disability was more than half of your income derived from hands-on patient care. Well, yeah, in your example, 60% came from working as a hospitalist where I was interfacing with a patient to diagnose and treat them. And 40% came from those two other jobs. Because 60% is more than 50%, Guardian would say, you're totally disabled, Chad. We're going to give you your full benefit. If you can somehow make the same money or more doing those two jobs at 100%, then when you had three jobs, including that of a hospitalist, it does not matter. So, plug for Guardian here is if you're entrepreneurial and you're going to have more than just side gigs, I'm going to call these like real jobs that are not incidental, or your goal is to be the chairman of the Department of Surgery, and you're going to have a surgical practice, and more than 50% of your income is derived from performing invasive or surgical procedures, because that's their other definition. And the balance might be protected research time, teaching residents, doing administrative duties. Their policy can potentially make what would normally be a partial claim into a total disability claim. And even if you stay in the same practice or the same hospital, or you still do two of the three jobs that you had previously, you can get full benefits as opposed to a partial benefit. So that's one thing that can be very advantageous in that situation. Now, of course, if you're a general surgeon, for example, and your entire existence is I go to clinic to determine whether someone needs surgery or not. I then talk to them about the pros and the cons and the risks and the rewards of surgery. I hope that they're going to say that they want surgery and I'm the person to do it. Then I'm going to go to the OR. I'm going to do what I do best. And then I'm going to follow up with them to make sure we got as close to the ideal result as possible. And God forbid you can't operate. any company is likely going to call you totally disabled because all of the other duties that you had were secondary or incidental to the fact that you were a surgeon. So each claim is different, but ideally, the best policy, number one, is the one that's in effect at the time that you become disabled. The next one is going to be the one that pays the most money under the fewest restrictions most of the time. And that's kind of how you start to use the process of what's important to me. As an agent, I don't really care so much what's important to you personally. I care what you think is important and relative to my needs, goals, philosophy, and of course, my budget.
Similar in terms of the importance of it. I know we covered GSI very well on the Physician Sense podcast, so I won't dig in. We don't have to dig into it too much here, but I would be remiss if we skipped on what I believe is probably one of the most important topics in the world of disability insurance. But explain at a high level the GSI and I guess more or less why it truly could be a once in a lifetime opportunity for some. Just kind of give us the 10,000 foot view with the vitals on it.
Easy. So you sold this stuff before and you know what the underwriting process is. So for those of you that are listening, once you decide you want to buy disability insurance and you know what company you want to go with and what policy provisions or riders you want to have included, now we start the formality of actually applying for coverage. So you complete an application that gets submitted to the insurance company. Right away, the insurance company is going to do a prescription drug canvas. So if you filled a prescription for something, we know you go into the pharmacy, you're signing off like, yes, I've been counseled, I'm here to pick up my prescription. That immediately goes to a third-party database that the insurance companies have access to see. So they can tell us who wrote the prescription, how many refills there were, what the medication is. They might not know what symptoms are being treated or what the current status of the symptoms actually are. So once they do this, if you didn't tell them when you answer the medical questions, they're going to come back to me as the agent and they're going to say, go ask your client why they took this medication, what symptoms are being treated, what's the current status of the symptoms, are there any residual problems? Then we have access to your medical insurance claims codes. So you go to see a physician, you tell them that you've been having fatigue, maybe daytime sleepiness, during the day, you're feeling off balance, off kilter. You didn't mention that because you're like, it was a couple of vasovagal episodes. I think I was dehydrated. It's not a big deal. I went to the ED. They pumped me full of fluids. I had some electrolyte replacement. Like, I'm good. Maybe in the medical world, you're good. But from the risk management standpoint, I will call this probability underwriting. No, you are not good. We're going to come back and we're going to ask questions. We're going to say, when did this happen? How long did it last? Have you had more than one episode? Let's go with one episode within 12 months prior to applying for disability insurance. I can tell you, you are an instant decline. Done. You should have never submitted an application for medically underwritten insurance. Because of that, you very likely may become ineligible for what we're going to talk about, a guaranteed standard issue plan. And then after they've done the prescription drug check, after they've asked medical questions from seeing your results and your claims codes, we have a HIPAA compliant authorization in that application where we can get a copy of your medical records. And that might lead to more questions. That might lead to a paper trail of, oh, we see you were referred to a neurologist. Let's go ahead and get those records. And what might seem to be a seamless process where typically medical underwriting is 4 weeks to 6 weeks, it could easily become 3 months, 4 months, 5 months, 6 months. And then at the end of it all, you find out that, Chad, guess what? We're not giving you a policy at all. We call that a decline. Or we're going to offer you a policy, but it's going to have modifications. We're going to exclude pre-existing conditions. And that could be specific body parts. It could be certain medical conditions. And these exclusion riders are going to be very, very broad. And as a physician, you're not going to like what you see because you're going to say, this seems too broad for me to sign. And at the time of claim, we would say, well, why did the underwriter do this? What was their intention behind putting on the exclusion rider? And if at the time of claim we deem that that pre-existing condition caused or contributed to the disability, you're not going to get paid for that claim. If we determine it didn't, it was just something that was there, but it was unrelated, you are going to get paid. So what if you have pre-existing conditions? You have to be super, super careful. And for those of you that are residents or fellows, even if by the time you're watching this or listening to this, you graduated and you're within 62 days and 180 days after graduation, assuming you're not doing another fellowship if you're a fellow, you're not doing a fellowship if you're a resident, and you happen to be at a hospital that has what's called a guaranteed standard issue offer. Well, now you can buy a policy with no medical underwriting, in some cases, no medical questions at all. In other cases, very generic gatekeeper questions. Like if you were diagnosed with cancer last week and you're in the middle of chemotherapy, no, you are not going to qualify for this guaranteed standard issue policy if you have not been working on a full-time basis or you've had to modify your schedule due to your medical condition. Otherwise, we're going to remove the prescription drug check. We're going to remove the medical questions other than the gatekeeper questions. We're not going to get medical records. And you essentially have a free pass to get high quality coverage for the same price or less than what you would have paid in the open market, even within the same insurance company. So if you are unsure what is in your medical records, you've done some bad things, you've self-prescribed, you've peer prescribed. Oh, my co-resident wrote me a script. There's no medical records that go along with this. You're seeing a chiropractor and you tell me it's prophylactic, but the medical records say something different. You've had a needle stick in the last couple of months and you have not had a 6-month post needle stick blood test that's negative for hepatitis B, hepatitis C, and HIV. You're going to get an exclusion rider for bloodborne pathogens. Like, we're not going to cover that if you convert and become HIV positive and you can't work. If you're currently pregnant, if you are going through infertility, you're going through anything along those lines, you've had C-sections or complications before, you have Crohn's disease, you have ulcerative colitis, you have ADD, ADHD, you've had surgery where hardware was placed. All of these things could now run the risk of you becoming ineligible for a GSI plan. So the 3 big companies that have GSI, it's really 3 out of the big 5, if you will. Berkshire, which is Guardian, you can use those interchangeably. Standard Insurance Company, and Emeritus. Now, in some cases, the GME knows that these plans are there. And if you call GME, they're going to tell you, oh, you're asking about a GSI plan. Here's the agent or the group of agents that could provide this to you. In other cases, these are what's known as non-endorsed GSI offers, where someone like me went to the insurance company and say, hey, I do a lot of business at Hospital XYZ insurance company. Will you give me a GSI plan that I can offer to the residents and fellows at the institution, knowing full well that this plan is not endorsed, it's not an official plan that is a vendor by the hospital. None of that exists, but we will make this available to you. So why is this so good? It's easy. Policies are typically turned around 24 to 48 hours. There's no medical questions. You could tell me you rock climb, skydive, jump out of a perfectly good airplane, all of these things that I, as an insurance person, would never do. You can answer yes to these things. I perform martial arts. I'm a black belt. I get the crap kicked out of me. Not a lot, but it does happen. Normally, we would not cover disability as a result of that. Here, we might ask you, but we don't care. We don't ask about BMI. So you could be too thin. You could be too heavy. It makes no difference. Here's the caveat, is if you apply for coverage on a medically underwritten basis, and general rule, you are declined. Like, Chad, thanks, but no thanks. Like, we don't like what we see. We don't want you. Or you're postponed. We don't want you right now. Like, you just started an SSRI. We want to see a year that that medication is working, the dosage remains the same. You applied and you got an exclusion rider for psychiatric disabilities because you had ADD, ADHD, and you were taking Vyvanse or Adderall. Or your agent thinks that they're being cute. You apply, they speak to the underwriter, they got the medical records electronically, which takes all of 5 minutes, and they tell you that the Titanic is going to sink. Pull your application. General rule, if any of those things happen, you have now become ineligible for the GSI plan. So, what is so crazy about this in today's marketplace? I believe there's two types of agents dealing with residents and fellows and recent graduates. And we're going to call this the haves and the have nots. So the haves are people that actually have GSI access, and it might be their own plan, like I have several, or it might be other agents that I work with, and we kind of cut a deal. You can use mine, I can use yours. We'll just split the compensation as a result of it. Don't worry, you can have more. You're the person that found the client and they're selling it. You're just using my GSI plan. Like, I'll take a small percentage. But unfortunately, this does not happen all the time. So again, this is my beliefs. There's 3 times or 3 reasons that you're going to not be told about a GSI plan. So the first one, not in any given order, negligence. I'm a newer agent. I don't really do the medical market. Like, I got referred to a resident from my co-resident's father that happens to be an insurance agent or financial planner. Okay, they don't know what they don't know. Ignorance is bliss, but you're probably not going to get an ideal result. You're very likely not going to be offered a GSI plan. Number 2, it gets worse. How about willful negligence? You don't want to know. Like, it's not my job to market other people's GSI plans. I don't want to give away a potential client, because if I want them to buy other financial products and stay with me for life, if I make an introduction to another insurance agent, you might not come back to me. So sure, I'll not mention it at all. I'll put you into medical underwriting. If things don't work out, I didn't tell you about it, and you come to find out later, yeah, you're probably not going to be very happy with me. And the third one, a lot of your listeners are probably not old enough to remember this, but a great movie with Michael Douglas is Wall Street. Greed. In that movie, they said greed is good. That was what he was being taught. No, greed is not good. Insurance agents look at it as it's difficult enough to find a client. I'm not looking to give away a percentage of my commission. I'm not looking to give away a client. Again, as a result, I might know that it exists. I might know that that agent is even open to sharing, but I don't want to share. So again, the first thing you need to do if you're a resident or fellow and you know, or you're not sure what's in your medical records, you got to find out if there's a GSI plan. That should be your first step. How do you know? Speak to people that are in the medical marketplace, like me, that do this every day. Speak to people like Chad that interact with insurance agents like me every day. And Chad's not wrong. A lot of times he'll fire off an email. Hey, is there a GSI plan at such and such institution? And in about 2 minutes, I'll respond to him. Yes, there is. No, there's not. There used to be one. It's not there anymore. Otherwise, you really run the risk of losing the ability to protect your most valuable asset. And when it comes to GSI, I'll kind of end with this. You do not need to provide your social security number, your state of birth, your country of citizenship, your driver's license number to get a quote. Unfortunately, I've had people that told me they've never applied for disability insurance before. I tell them about the GSI plan. I offer them the GSI plan. They apply. And 5 minutes after their application is submitted, the insurance company comes back to me and says, we have reason to believe that this individual has applied for disability insurance previously. In fact, this is the company that they applied to. Can you go find out, is that policy still in effect? Were they offered coverage? Were they declined? Were they modified? Did they pull their application? I'll go back to the person. Larry, I never applied for insurance. I'm like, well, we know it's this company. They don't make this stuff up. There are systems in place of checks and balances. How did this happen? Oh, I did speak to a broker. I was just getting quotes. I'm like, no, you were not just getting quotes. You actually applied. And at that point, they're ineligible for the GSI plan. So what can I do at that point? I can wish them the best of luck. Guardian has a couple of exceptions to the rule. Number one is if you apply to Guardian, assuming that there's a Guardian GSI at your hospital, even if you get declined, you're still eligible. The GSI is always a fallback. They always take their own modifications, decline, postpones. So if there's a GSI plan at your hospital with Guardian, I got news for you. That's what you should be applying for, whether it's the GSI or whether it's medical underwriting. At least you've got your fallback plan. Number two is we just had match day. You guys know where you're going to go. You listen to Physician Sense, you're doing your homework. You're like, I got to get my disability insurance before I start my residency. I'm going to be so busy, I'm not going to have time to do anything. Well, if you apply for coverage before you start at the hospital where there's a Guardian GSI plan, regardless of the company, even if you're declined, Guardian says you're still eligible because you didn't know that there was a GSI plan where you were going. Like you didn't have any kind of access to that. So again, you kind of get a free pass for that. And the third one is even if you've already started, you finished med school, you got your degree, you go to the hospital, it's the first couple of months of training, you still don't know that there's a GSI plan, you apply to a company besides Guardian, you get an exclusion rider for psychiatric claims. And you don't want that. Because that happened within the first 9 months of your start date, again, you get a free pass. So these are the exceptions to the rule. But honestly, it's better not using an exception if you don't have to. Sidestep the landmine. If it was me and I'm meeting an insurance agent for the first time, and I said this to Chad before we went on air, I don't care how smart they are. I don't care about their education, training, and experience initially. I would literally, this would be my icebreaker question. Hello, Mr. and Mrs. Insurance Agent. Do you know of or do you have access to something that nobody else has that's exclusive either to you or somebody else? At least I know what I'm getting at. Because remember, insurance is like an iPhone. If we set it up the same way and we all have access to the same discounts and we set the policies up exactly the same way, the price is going to be the same. So when you're told to shop and go to 2, 3, 4, 5 agents, we're all going to tell you the same thing. Some are going to do it in a better way than others. Some are going to be a little bit more polished than others. Hey, I'll give myself credit. Maybe I'm going to be more entertaining than some of the others. But short of that, ideally, we're all coming back with the same thing. So shopping is really more of a waste of your time trying to get a better rate or something that's a unicorn. Just ask the question up front. Do you know of or do you have access to something that somebody else doesn't? And if you can't do it and you know somebody else has it, can you put me in touch with the name of that agent and give me their contact information? And if they're working in your best interest, they should not have a problem doing that.
Yeah, such a vital topic. I mean, if you're listening to this or watching this and you're about to head into residency or you're in residency or in fellowship or you're recently out of training within that window that you noted there, possibly a once in a lifetime opportunity. And it's just one that you don't want to miss. And it's crazy when we get some attendings that are past that point and now, we're going to you or we're asking questions before we even get to you. And we're like, and
Yeah.
we know that their program had a GSI or they have a policy that has, modifications to it when we're like, what happened? Like, well, it was my roommate or my brother. It was my brother-in-law's frat buddy. He works at that big firm. And like, they
Yep.
said it was physician own-occ. Are you sure? Like, I don't know. They didn't ask me that many questions. I don't know why it got declined or I don't know why there's all these modifications. And I'm like, like 3 weeks before that, you could have had this GSI policy. So it's an important one. One that, whether we're on, the WealthKeel YouTube channel, Physician Sense, even our guest blog on the WealthKeel side of it, we had you write that. Heck, that was years ago at this point.
Yep.
But so vital. I now know why Andrew Huberman does 3 hours. So as I noted, this is my first you're my first guest, Larry.
Nice. I love it.
I wonder if we're
Right
going to
out
get
of the
to an
gate.
hour or not. Like, there's no way we'll get to an hour. And now I'm like, okay, we're at an hour and I still have some questions. So we're not going to skip the questions, though. We're going to rapid fire these.
Perfect.
So, like I said, I now know why Huberman's podcasts go 3 hours when he gets into an engaging conversation. So, um, three, I'm going to label them as easy. You can add a little bit of context. You don't need to give me a one word answer, but these are the three that I wanted to go through because they come up all the time.
Yep.
Is my group disability enough?
Probably not. So we said it's probably going to be taxable in most cases.
Mm-hmm.
It's going to have offsets for Social Security disability. It's going to have offsets for workers' compensation if you get hurt on the job. It's going to have a cap on the monthly benefit in most cases. Typically, bonus, overtime, productivity is not going to be covered. So if your base salary is say 400,000 and you're getting 300,000 in form of RVU, WRVUs, and something along those lines, no, it's probably not going to be enough. Ideally, an individual policy is going to make up for the taxes that you would lose on the group plan. And then it's going to allow you to protect the earnings that you have in excess of that cap. And then to top it off, it will be portable in the event you leave that job or you want to become self-employed or do locums or something like that.
Perfect. I know there's a lot of riders out there, and I know that this is very, out of all the conversations we have, this is truly where you're customizing it for the individual. But what
Yes.
are your top three riders that most should be considering? Like, hey, here's the list. These three probably fit the profile for like a lot of you, if not all of you. What riders should most individuals be kicking the tires on, at least at the start, out of the gate?
Yep. So your policy should be both non-cancelable and guaranteed renewable. Now, in some cases, the policy just comes like that. In other cases, the base policy is guaranteed renewable, which means that the insurance company can change the premium rates by class of policy holder. So let's say in the state of Florida, I buy a guaranteed renewable policy with Company X. Company X now goes to the Florida State Insurance Department and says, look at how much we took in, look at how much we paid out among surgical specialties. We want a 30% rate increase. And they're like, there is no way we're giving you a 30% rate increase, but we'll give you 15. The moment that that is granted to the insurance company, they're going to come right back to you. So there's one company that I see that's notorious for showing policies that are only guaranteed renewable and not both non-cancelable and guaranteed renewable. So non-cancelable and guaranteed renewable means they can't change the premium rates. They can't change the policy provisions. You can get rid of them. They can't get rid of you. It's better than a spouse or a business partner. Like you can get rid of it and you're fine. So guaranteed renewable really leaves a young physician at risk because we don't know where medicine's going. We don't know where disability insurance claims are going. Like we don't even know where like the stock market is going. So good rule of thumb is your policy should be both non-cancelable and guaranteed renewable. If you only see guaranteed renewable or GR, something to the effect that the policy rates can be changed by class of policyholder, that should send up a red flag.
Hmm.
Number two is going to be own occupation. And again, some companies, it's built in. Other companies, you're going to look for the own occupation rider. And again, rider just denotes an extra piece. So you want to make sure that it reads, you're unable to do the material and substantial duties of your occupation, period. You know it's not own occupation if it goes on to say, and you are not gainfully employed. And again, the base definition might say you're unable to do the material and substantial duties of your occupation and you are not gainfully employed. And then later in the policy, you see the own occupation rider that says, well, even if you are gainfully employed, you'll still get your full benefit if you can't do what you were doing before. So some companies, when they have their illustration system, they have the base policy definition and later in the proposal has the own occupation rider. So look for that. You really must have a partial disability benefit. This takes away the all or nothing. I'll tell you, most disabilities are partial. They're not total. So own occupation is kind of like pregnancy, Chad. Like you either are or you're not.
Yeah.
If I ask you, are you currently pregnant? Like I hope you know the answer, right? A lot of times people are like, well, yeah, I'm still working as an emergency medicine physician, but if you need to give me a but, you are working in your occupation. And if all you have is own occupation, maybe short of Guardian with that 50% income threshold, you're not going to get a benefit. So you need to add a loss of income component. This should be a non negotiable. Otherwise, you're either in or you're out. The other ones that I would throw in there are cost of living adjustment rider or COLA rider. You're not going to buy policy A versus policy B because of the COLA rider. It's just not going to happen. Younger you are, the more important it is. If you're mid career or late career, it becomes less important, and you should probably buy a bigger benefit without the COLA rider than a smaller benefit with it, unless you're going to increase your coverage really early. And then finally, you should have an increase option. This just allows you to buy more coverage regardless of your health as your income is rising. And short of being disabled and on claim, we're not going to ask you any more medical questions. We're not going to do a prescription drug check. We're not going to get a copy of your medical record. So if you make it through the process once, whether it was medically underwritten or even through GSI, you can buy more later and we're not going to ask you anything short of you being on claim. Of course, if you're on claim, we're not going to give you more and allow you to collect for that disability that you're currently on. That's really the big ones. You'll find some other optional stuff like a catastrophic rider. We could debate that. You'll find unlimited coverage for mental or nervous conditions like anxiety, depression, stress, chemical dependency, drug addiction. Some cases you have to have that in certain states or certain medical specialties. Otherwise, you have a choice and you could decide whether that's important to you or unimportant to you. And then the type of increase option, because there's different ones with different companies. Some offer two different types, some only offer one type. If you know you don't like one type and that's all they offer, you probably don't want that company's policy. It really is that simple. So I would just encourage anyone that's watching or listening, when it comes to GSI, it's kind of like when you went to the carnival as a kid and you got one shot at that brass ring to grab it. Take advantage of it, or at least know that it's there to take advantage of if you want. Number two is have an idea of who you're talking to. Like, how long have they been in the industry? How do they earn their money? Are they a financial planner that's selling financial plans and they're charging you for that? And then they're also selling insurance too? To me, there's an inherent conflict of interest. And it might not be bad, but at least know what's going on. And then finally, do your homework. It does not take a lot of effort to do it. You're better off doing it once, doing it right, get your questions answered up front. I'll be the first one to tell you, like, make us earn our commissions. There's a reason that the insurance companies pay us. Have us answer your questions. And if you happen to know more than the agent that you're speaking with, it's time to walk away. Unless they happen to be the endorsed agent for the GSI plan and they don't share with anybody, you might not like them, but you like the GSI plan. Buy it anyway, and then have another agent that you like become the servicing agent on that policy. So I will end with that, Chad.
It's beautiful. Oh, it reminds me too. So again, I'd like to add in life stories to show the character of Larry. Not that that would ever be in question, because we know that he is the guru, as I noted earlier. But once I reached out to Larry just last year, I was going to present at OU at OU's pediatrics hospital, and I go to Larry. I go, "Hey, do they have a GSI policy?" Larry says, "Yes, they do. Here's the individual. I don't know anything about him. Never met him before, but he's the guy." So just another good example. And I remember he was actually pretty handsome lad. So I put a huge picture of this guy on one slide, and I made it like a huge part of the presentation. I'm like, "See this handsome lad? He's your gatekeeper to the GSI. No one else, just this guy." And it got a lot of good laughs. But again, goes to show you that in that example, I'm presenting to a large group of residents and fellows, and even some attendings snuck into that one. And you weren't the guy, and you had no problem with that. You're like, here is the guy. He does the GSI for OU, and we put the name in there. And we always put our disclosures in there, just as you noted towards the end there, right?
Yep.
We always say when you go there, we want you to come out with disability insurance, maybe
Yeah.
term life insurance. Don't be like, oh, hey, Chad, I got this cool whole life policy, bought some mutual funds, added annuity in there. Like, just know what you're here for. We're trying to cover the base at this point. We can add
Yes.
layers to it later, but Larry, I can't thank you enough. Again, it's one of those topics where you're thinking like, it can't be that exciting, but I mean the levels and the amount of detail inside of disability insurance. I mean, we literally could go hours if need be. Um,
Easily.
it's it's crazy, and I mean, you and I are also we're good talkers, so we could also get into a topic and roll with it for a while. But I really can't
Yes.
thank you enough. As always, thank you for jumping on here. Again, just on this same topic, I send you a quick note. Hey, would you be interested in this? Yep. When can we do it? All right, let's do it this day.
Yeah.
And you're there for me at all times. So I appreciate it. We'll put notes in there so individuals can find you too. Clearly, any of our side of it, we're always sharing your contact information as well. We have you on the
Perfect.
physician sense side, but thank you so much. And we will share this message with as many as we can. And for all of you tuning into this video, hope you enjoyed our first guest episode with the one, the only Larry Keller. And as always, we will catch you on the next video.
You got it. Thanks so much, Chad. Anybody out there, I'm happy to review disability insurance policies you might have. I'm happy to talk GSI. You can always find me online. I monitor my emails pretty good. So it's L Keller, L-K-E-L-L-E-R at physician, no S on the end, financialservices.com. You can always call 516-677-6211. Use me as a resource. Do not worry. You're not going to get a glorified sales pitch. I'm happy to help all of you guys. Have a great day. Thanks for watching.
Thanks, Larry.
Got it. Thank you, sir.
This podcast is intended for general public use and is for informational purposes only. The WealthKeel YouTube channel is not affiliated with or endorsed by Park Avenue Securities, Guardian, or Physician Financial Services. And opinions stated are their own. Materials discussed is meant for general informational purposes only and should not be construed as a recommendation or advice. Please note that the individual situations can vary. Therefore, the information should be relied upon when coordinated with professional advice. Lawrence B. Keller is a registered representative and financial advisor of Park Avenue Securities, PAS, OSJ 355 Lexington Avenue, 9th floor, New York, New York, 10017. Phone number 212-541-8800. Securities, products, and advisory services are offered through PAS, member FINRA SIPC, financial representative, the Guardian Life Insurance Company of America, Guardian, New York, New York. PAS is a wholly owned subsidiary of Guardian. AR Insurance License 1057229, California Insurance License 0C37340. Physician Financial Services is not affiliate or a subsidiary of PAS or Guardian. Individual disability income products underwritten and issued by Berkshire Life Insurance Company of America, BLICOA, Pittsfield, Massachusetts, BLICOA, is a wholly owned stock subsidiary of the Guardian Life Insurance Company of America, Guardian, New York, New York, 754-5285.3, expiration 5/2027.